Okay. Good evening, everybody. It is August 9th. We had a hell of a week after, I don't know if any of you remember or paid attention, but I was out of town on vacation last Sunday, Monday, Tuesday. So unfortunately missed the beginning of what was a hell of a rip. I had a good time and it was well worth doing, but yeah, I always hate missing a trade like that. Let's dive in, talk about what happened. I think we've done a pretty good job of staying on the right side of the tape and kind of looking at the opportunities. And I look at what I posted last week and said, hey, this was pretty good. This is on point with some of the things I was looking at, and still see some things going forward. So hopefully we can make some money. As I said, what a rip. We highlighted coming into last week. This was where we had closed on the Friday, jumping forward to NQ. And I said, if we can recover this line, I really think we're going to rip. And I was looking at this 30,050, I was looking at a 29,600 target, a little bit below this significant resistance, which we ran almost straight to. So let's back up real quick and start at ES, which again, this is the 7530 line, 7350 line, I'm sorry. 7350 line that is held a bunch of times, and in my opinion right now, it's the most important line in all the stocks. If this breaks, we got a real problem, but we're well away from it now. No reason even thinking about that. But again, in the close-up, you can see we had a little fail breakdown here, tiny fail breakdown here that just turned into an absolute launch pad. And now we're just consolidating at the highs with a nice little low volume area that we can use as support. Just talked about NQ. This is a pretty big level. This is 30,050. We ran right to it. I was looking at this on Wednesday morning, I think. I can't remember the exact day. And I was like, hey, this is a really big move right to big resistance. I think I was thinking about taking some profits, but, as I said, I didn't have the right trade on from being out of town early in the week. But this looks like a very healthy high-level consolidation in a high-volume area. My guess is we trade between this, hang on, let me look over on the side right off the screen here. Kind of the low of about, I'll say 29,400 up to 29,900 would be a nice healthy consolidation range that should be very tradable. That's 500 points. So a little bit of back and fill here, and then I think we're poised for another move higher to follow ES. And we'll see how that trades out there. As always, there's noise over the weekend that could give us a volatile open. We'll see how we do. Again, just a close up here is the range I'm talking about that we could, just chop through before we're positioned to go higher. RTY, it's interesting seeing the small caps trading like much lower beta than the mega cap NQ and ES. But that's what's happening. A nice gentle pullback, okay, surge higher, nothing like ES and NQ, but still overall very healthy, right back at the highs. There's a little bit of resistance here from this old high. We're not at new highs, but not a lot. And you can see some support levels in here. Again, I look really at the profile, or I call it the histogram, because it's not a real profile. Let's talk about this for a minute. Regular listeners know that this is a big deal for me. I added this line. Usually when I put in a new line, I changed the color. I didn't, so I need to highlight it here. But this is 99.40 on the DXY. And I think you can see why I added it in here. It's clearly become a line, both support and resistance. And yes, yet again, right here, it's serving as support. So it held here is resistance, right here is support. Went up. This was the failed breakout, came back down, testing here. Let's see how we act this week. But this is the real line in the line in the sand, as I call it. It's the bottom of the 15-year wedge. It's coming up. This is getting tight. But as we find a significant level, of course, I'm going to put it on there. If this breaks, we're opening the door for that move down to test and possibly break this support line. I'm more technically, I'm neutral because we're in the middle here. Philosophically, I'm a little bit more bearish, but that philosophically and trading tactics are very, very different things. So I need to highlight that there. But we are going to spend a couple minutes on weak dollar plays and specifically gold in just a minute, because gold had a hell of a move that I did get involved in this week, but we'll talk about that. Rates, my friends and colleagues and people who focus on this are very focused on this. As a technician, I've got to say, like, look, we're not broken. And I say up in here, and I'm saying it for a couple of weeks now, we haven't broken yet. I think everyone here knows what this looks like when you tap, tap, tap. It's it's not breaking, but this is the exact formation that gold had, and it went that way. It can go both ways, but this does not look good. And in conjunction with some of the views on dollar and things like that, expecting higher rates absolutely could change things. And I'm bullish until. I'm definitely bullish equities. We're seeing new highs across the board. I've been fairly steadfastly bullish for at least a few months now. If that changes, this would be a reason why, but it has not changed yet. Same thing. This is just yields. You can see, if this were a semiconductor stock, what would we think it would be doing? And the charts work the same way. It just measures supply and demand, and that certainly looks like the bias. Overall view, strong broad surge to new highs. The market's very intact. This is, it's the equivalent of 73.50. Look at this profile and how low that is. How much this. So this is a price acceptance at the highs. That's great. And then when we couldn't break down, they're like, take them up. And that's a hell of a move that I unfortunately missed. But very, very good there. NQ, same, just another version. Excuse me, this is QQQ, but essentially the same thing. Got over this level, now we're consolidating right around this high volume node. I think back and fill, as I said, and probably biased to at least test the highs. How this responds at the highs will be telling. That's the next largest thing I'm watching. ES SPY already through it, so I just want to see that hang out at the highs and not break down back into this range. This is what I'm looking at as support. Is the top end of this. Let's see that we can hold up in there. Again, so I'm going to revisit last week. Many people, and myself included, were a little bit worried about NQ having broken major support and everything. But everywhere I looked, it just looked way too healthy to get overly concerned. And this is very much the case right now. There is nothing wrong with that. I think it was an opening print that said, extended is not bearish. And I think that very much applies here. Extended, sure, but that's because it's going up so fast. That's not bearish. Maybe it's hard to get in. Maybe it's hard to trade, but it is not bearish. Russell 1000 growth got a little sloppy, was following the NASDAQ. This worked really well. This low volume area coming off, you can say that it would use this as the floorboard. I think it's the low volume node. That's how I think about it. It went down in, couldn't push through, could not accept into this price range, and just bang, back higher. This is a pretty decent resistance level that we're pushing through. I wouldn't call this breaking out. We pushed. So again, this supports we're going to back and fill for a day, 2 days, 3 days, or a week. I don't know. I can't guess time, but something like that. And still, that would just look very healthy and be poised for a move higher. FXI, I made a big deal about this high volume area. We really looked bearish. I was looking for an opportunity to buy it down here. It bounced too early. We got back, tested this, and then as soon as accepted into this high volume node or area range, it just ripped right into it. And now we're consolidating right in the middle of it at, right at some people would call it the VPOC, a high volume node. EM, choppy, not toppy again. Yes, a lot going on. I think we heard about what happened in Korea. We know what happened with King Leo. That very much impacted these kinds of names, if not EM specifically. And that seems to be over, and we're right back looking very healthy. If you want to make something of this 50-day that we're hanging out underneath it, you can. I am not. I'm not overthinking that at all. Along with all the market, this looks bullish and looks healthy to me. Breadth. I've said this has been fine for a while because it was not compelling, but like absolutely fine, I think is the right word. I don't know what else to use. But now with this push, we're breaking out to new highs in breadth. 62% of companies have their price over the 200-day moving average. It's a simple yet effective view of breadth. And you can see you can spend a lot of time up here really high. This is a very healthy market. We know how it performed it during this time, and we're pushing back up there. This looks great. It looks even better. I think I summed it up there perfectly. I like this chart a lot, and I use it regularly. This is as good as I've ever seen it. You know, big mega caps with big weeks. This is a weekly. You know, all this. Okay, here's a name struggling down 0.5%. You're always going to have pockets of this. Oil pulled back a little bit, no big deal. But the number of green squares we have here and how green they are is very good, especially when we're, you know, and it arguably extended. But this looks very healthy. Yet again, with this kind of a screen, it's really hard to get bearish. Okay, changing subjects. Crude, again, I want to highlight these levels are working great. I have not put any new levels in here for I don't know how long. But it stopped here. It stopped right in this zone, which I think is incredibly important. Pulled back down to, you know, right here, bouncing. It's just, these are levels that you can trade against. My advice is do not trade in the middle, but if you get an entry like here, take it. It's very good. It'll be, I can't guarantee you can work, but it's a nice risk reward trade. You can see it got a little sloppy here, but not bad at all. That's a pretty good entry opportunity. This Brent, which I'm very curious to see how crude and Brent act on the open. It pulled back to it. I don't think this is a coincidence that this is a high volume area and it just touches here and rallies. Based on what we just talked about with FXI and some of the others, where you penetrate into this high volume area and you get acceptance, just like you did here. It stood just a little bit, then it accepts in and it goes all the way to the top, then all the way to the bottom. Okay, we broke down below it. Now we're back in it. If this pattern continues, you know, very distinct possibility we could be going right up here to the top in short order. That's a trade I'm going to be looking to put on. I want to see how it acts at the open. Probably won't do it on a Sunday night, but I reserve the right to change my mind on that. But we'll see how it acts, and could be looking for something like that. That would be a very nice trade, 46 to 54 on an ETF. So that's, you know, eight points. That's like a 17-18% move. I would take that. Natural gas, again, I think the trade is coming in the shoulder season. That's kind of September, October, when people start worrying about the winter inventories and we're not paying for air conditioning and things like that again. This is Seaborn. I think U.S. is going to be a swing producer with that facility in Qatar out. We will see. All I know is that this is very different action than we've had for years. This is just a one-year time period. If you go back 3, 4, 5 years, it looks very sloppy and generally downtrending. This is different. I call it a change of character, and it means put it on your radar screen. All right, here's where I'm focused. I bought some gold right around here last week. I didn't buy enough. Had a nice little move there. Again, this I just put this line in. I posted the trade a couple of times. There's a lot that stands out to me. This is the GLD ETF. It's just easier for me to chart than GC, but I can trade it during futures. This is just a cleaner chart, just for the record. This is obviously a big level. We stopped right here. Again, nice move. This did the same thing that I was talking about with rates, tap, tap, tap. I was worried. I was like, if this goes lower, this is where it's going. So I talked about doing a value buy. I did one, I think, back here and stopped out. I made or lost pennies. And then I was waiting for something. And then when we got this move, I wish I'd done the value buy, but I got in pretty good. And I'm still long. I have a longer term time horizon for this. These are swing trades, not day trades. You certainly can day trade them. You can figure out what you can do right at a huge resistance level if you're looking for a very short term day trade, especially after a large move like that. It worked great in the NASDAQ. I'm not shorting it. What I will do is look for a value buy or, you know, another entry if we can come back towards around here. I'll be adding in. And then certainly if we push higher in the near future, that's a sign of strength, and I would be adding. If we can clear this level, get long, get longer. And if we just do something like this, that's the most likely outcome. Try and buy it down here with the expectation of this. Watch it in conjunction with the dollar. Those are the other weak dollar plays. It used to be EM. That's one of the reasons I posted on there. It doesn't work anymore because of exogenous influences, silver, copper, metals. There's a bunch of them. I think most people know who they are. If we want to go through them, I could do that special at some point, but only if people kind of ask for it. Bitcoin, there's very little going on here, and there hasn't been for several weeks. I think that's all I need to say. Energy equities, these actually look great on longer term charts. I want to show detail in here, and I want to be consistent. They pulled back with oil pulling back, but overall they're pretty constructive. Valero, as a proxy for refiners, is doing great. The major Chevron is doing okay. This is XOP, oil exploration and production. I don't know why I can't come up with that word. Still looks very good. Just in the short term, we're down a little lower. And XLE, they all have constructive longer term charts. That's my takeaway at the end of these 3 pages, is that, you know, so many sectors look good. Look at this, K-Web. So this is China coming back, but semis are back, ripping and consolidating at the highs for a few days. Recent highs, not all-time highs. Consolidating at recent highs, consolidating at recent highs. You know, big move, consolidation, big move, consolidation, big move, consolidation. This is healthy action. And then this is one of my favorite pages that I have on my own charting software that I look at. Just gives me a temperature of how things are going. Consumer looks good. Healthcare longer term looks great. This is, you know, want to make it a cup and handle. Yeah, on a short term basis, okay. Industrials look great and financials look great. There's just a lot going on that looks very healthy. Yes, again, one of my favorite charts. I don't talk about it that much because it doesn't change. This is what, 16, 17 years at this point, and I'm kind of expecting a test of the top of the rail, and this is why. Nasdaq's already pushed out through it. I was a little concerned when I saw this, but when, you know, you break out and then you push back in using conventional technicals, it can, you know, hey, that means this is overdone, but we're right back out. This does longer term. It suggests there's not a ton of upside left. But even with the swing trading intermediate time frame, this is not a concern. Just sort of back of mind. And IWM, I have to use this because Russell doesn't go back far enough. Right in the middle, a lot of legs there. These all look very healthy. So I'm going to stop there. Oil still warrants attention. This is just a summary. Everything ripped, rates held support, and oil warrants attention. I already said all of that. So I'm happy to see if there's any questions. I don't think there are. We don't have a lot of Q&A, but it does seem like we have some people watching and listening. So if you have any questions, I'll take them. Otherwise, we'll wrap it up here. Thanks very much, and good luck this week.